Good morning, ladies and gentlemen. On this super important day for global markets, the Indian stocks on Dalal Street are acting with great maturity. The great tariff wall in the USA has been erected, and the way Indian markets are performing, this is a cause for a mild celebration, to say the least. Let me go through with the indices first. The Nifty is down only 60 points at 23,271. It has recovered from a low of 23,145. Domestics, all sectors and stocks that are focusing on the domestic economy are actually up. The Nifty Bank is up 76 points. The small cap index is back in the green. The Nifty mid cap is down just marginally. And look at the clear winners. The Nifty Pharma Index. Remember, drugs and pharmaceuticals have been spared the iron rod as far as fresh US tariffs are concerned, and that's the reason why you see a 3 percentage point uptick on the Nifty Pharma Index. The Nifty PSU Banking Index, where domestic demand for credit seems to be unaffected, is up 0.76%. And more importantly, see the rally that's happening in textile stocks, because India has been hurt the least within Asia when it comes to newer US tariffs being imposed on Vietnam, on Bangladesh, which are very, very big textile competitors for India. Without further ado, we'll have Mr. Arun Kejriwal, a senior market expert, joining us on the show to understand the pragmatic response that Indian stocks have given to this great US tariff wall. Namaste Arunji, and a very warm welcome to you, sir. How do you see the Indian stock market reaction for today?
Well, I believe the markets are doing much better than expected. GIFT Nifty before markets actually opened was giving an indication of Nifty being down 350 to 400 points.
Yes.
We are nowhere near that level. Secondly, one would have expected a sea of red all over in the market on such an important day. Nothing of that has happened. And with whatever little I have heard on television, and I myself was on a couple of TV shows, investors are not panicking. I am
Yes.
referring to those new investors who have joined post COVID. So there is no panic from them, and the urge that they must trade on every day also seems to be missing today. Something very, very positive for our market.
Absolutely. Arunji, I think you've encapsulated it all in this very brief intro. Now, I would like to draw your attention to this a very sharp uptick that we've seen on pharma stocks. Pharma has been spared the iron rod by US. All pharma imports within the United States will not attract additional tariffs. And of course, a clear winner is textiles. How do you see these two sectors, and how do you wish to navigate markets from now on?
So pharma has typically been known as the defensive sector. When you don't know what to do with your money and you want to continue being invested in the market, the go-to sector used to be pharma. Again, it has been proved that the defensive sector is something that you fall on in times of stress. The other one is textile. We had conceded the pride of place of being an exporter in textiles in Asia to Bangladesh and to Vietnam. Now we have an opportunity to get back. On a broader scale, what I would like to drive home to our viewers is that India started Make in India program about 4 or 5 years ago. I believe the time is now coming when we will be able to capture this moment, because as a result of what has been announced by Trump, of course it's early days, there would be fine tuning, retweaking, etc. But the Indian manufacturing platform could go the world over as people look to readjust their purchases and sales in view of what Trump has started as a tariff global war.
If you give a 6 month to an 18-month view on the markets, Arunji, are we going to be more domestic focused in our outlook for stock picking? What are the 2 or 3 sectors that catch your eye immediately? We see a positive sign on the Nifty PSU banking index. Bank stocks are doing pretty well, and NBFCs are in top form. How do you analyze this?
So let's understand India is largely a local economy, excepting for two items of import which form a very large basket. One is edible oil and one is crude oil, or let's put it both the oils. We need to import this. We are not self sufficient. Of course, great efforts are being made to ensure that production of oil seeds in the country goes up uh, on the agricultural front, etc. However, these two form the bulk of our imports. If we leave aside this, we are able to manage to a great extent from alternate sources. As far as chemicals are concerned, a lot of manufacturing has begun in India. Sourcing has improved. Our dependency on China seems to be reducing. Talking of a 12 to 18-month period, I believe, yes, stock picking would be more of a domestic exercise or a little bit of exports mixed in with domestic sales, which is not US predominant. I believe this would be the opportunity over the next 12 to 18 months.
Arunji, seeing this mature reaction in the Indian market at this point of time, now that the first 2 hours have almost lapsed, do you have a reason to believe that maybe 23,000 on the Nifty, 22,800, 23,100 is a new support zone for the market?
So 23,000 is a new support zone without doubt, but I would not read everything into the market holding for the first 2 hours today. I believe the actual test will be tomorrow when
Yes.
we see how America reacts to what Donald Trump has said. Let's understand uh, serious implications for America. They say that the tariffs imposed would yield 2.2% of the GDP for America or $660 billion. End of the day, this is what is going to be paid by Americans for continuing to import what they have been doing so far. If you break down this import shell, you will find that the bulk of this import forms two broad categories. One is low value mass consumption, daily consumption, labor intensive products which are used by bottom of the pyramid Americans. And you don't have any alternative for those products. They cannot be manufactured in America simply because they are no longer viable. The remaining would be a broad basket of products which form key raw material for high value products that America needs. I don't think you have a choice in eliminating either of these two baskets. Now, the lower end of the product, the brunt of the cost would have to be borne by common American citizens, and they have no choice, but their life would become that much more expensive. Inflation is now going to rise in America, and the the dividing line between inflation, stagflation, and recession is fairly thin. So I believe things could could be worse off for America as the rest of the world. What does this mean for global markets? We need to find replacement for all the money that was flowing into America because the economy was roaring and it need not be the same going forward. So there would be a flight of capital from the global markets in America to some other countries. If we are able to get our act together, valuations tend to improve. We stop being sentimental about valuations. This could be a great time for stock booking in our country.
Well, and that brings me to the next question, Arunji. Provided the parameters that you set work out to the advantage of India, where do you think you are going to pour fresh money?
So, I would like to talk on this subject with a little bit of a caveat. It's earlier days. Fine tuning would definitely be needed. It's less than 12 hours since Trump made his announcements. But very clearly, the winner would be the BFSI space. Indian banking seems to be doing well. If you look at even say a week ago, you would find that the bank Nifty has been the outperformer in the 12-month period ended March 25. Uh, you would find that three of our banks, large public banks, private banks actually, have actually two of them are at new lifetime highs and one is close to its lifetime high. You have another 4 or 5 banks which are well above a median price for the year. Even from the public sector space, you have SBI Bank, which has had a good stellar performance. NBFCs also seem to be well placed. So I believe this is something which is largely insulated from all that you are hearing from the US. So this should be one top sector. Pharmaceutical is another sector which has been completely let off the hook, which could be another sector. And if you recall, some of my top picks, which we had spoken about even as early as last week, were from the pharma space. So that looks another sector. Now you need to find find print, go deep dive and look at something from maybe say the textile space, maybe from other companies. Real estate, wherever you find value, wherever you find uh, growth, and the company is not into land bank accumulation but concentrating on delivery of projects. This could be another area where you could find investment opportunities. Mind you, prices of real estate are cooling. Therefore, it is not inventory led growth that will drive the company, but delivery. Just execution, handing over projects, and churning out real estate flats, as you call it. I believe these are some of the areas where you could get traction in the coming months.
Okay, so clear winners are private banks and NBFCs, pharmaceuticals, to some extent textiles, and maybe real estate. Uh, Arunji, if I were to press you a bit further, maybe one or two names in each of the four sectors that you mentioned based on the screeners that you've just elaborated. What do you like
So,
on private banking and NBFCs to start with?
so, when you talk of the banking space, you have to go with the leaders. They also form very dominant part of the PNB. So without doubt, ICICI Bank, Kotak Mahindra, uh, your HDFC Bank, which form a very large part of your Nifty basket, would be the top picks. Add to that a SBI, and if you are to ask me amongst the PSU banks, what catches my fancy, a PNB, a Bank of Baroda, and maybe a Can Bank. So you have got a list of four from the private sector and three from the, sorry, three plus SBI, so four from the public sector. This would be the top pick. Within the NBFC space, very clearly affordable housing, housing finance companies would be the top picks. And my top two bets in this segment would be a PNB housing and a Aadhar housing. PNB has given its business update, I think yesterday or day before, and the numbers were impressive in terms of growth that they have achieved. I'm not sure whether Bajaj Housing would be able to match those numbers as far as housing finance is concerned. Moving on in pharma, I think I have been talking on and off about this sector. My top picks here would be a Blue Jet, irrespective of the fact that they had some income tax issue, which is something that pertained to a prior period. And this notice is more to do with where the time limit for filing the case against the assessee was getting over. Therefore, this notice was served on that last working day of the financial year. Uh, Besides this, I would look at a Innova Cap tab, uh, a slightly diverse application of pharma, a Medi Assist, and a Indigene. This would form this sector.
Okay, this is a very, very substantive and quality list of stocks that we've talked about in the banking, NBFC, and pharma space. Arunji, the rally in textile now reminds me of the 90s when at least I entered the market and you were already an established name. Textiles has been one of the largest employers in India in terms of the workforce. What would you like in textiles? Garment exporters, integrated mills, what catches your fancy?
So I would have to rework a lot of my numbers simply because a lot has changed in the last 3, 4 years in the textile space. Uh, the sad happenings across the border in Bangladesh have also impacted this sector quite adversely, of course, to India's advantage. And now we have a situation where India is getting back into the favored nation as far as a reliable exporter manufacturer is concerned. So a relook at some of the capacities, the order flows, etc. So I would come back to you with this maybe in about 15 days time.
Wonderful. So that will be a nice research-led interview that will happen a fortnight from now. Arunji, view on gold. Clearly, one very big winner is the Indian housewife. We've seen gold appreciating 40% in the previous fiscal, and the rally continues unabated at record highs. How do you want to play gold?
So uh, personal likes, dislikes apart, if I look at it from a market perspective or an investment perspective, the possibility of gold giving you better returns than the stock market in absolute numbers is in favor of gold, simply because you would see money being pulled out of the US markets and going elsewhere to look for returns. How much of it would flow into global markets other than the US is still a question mark, because we also need to see how reciprocal tariffs result in retaliatory tariffs. We will have to keep on refreshing our English language because you'll find new such terms coming in. Now, along with this, you will also have to see how the WTO, how the other nations, whether it is the BRICS, whether it is the European Union, whether it is G20, they come together to, to take on the American tariff war, which is going to have significant repercussions for global trade. In this scenario, I believe gold has a much better chance of being a clear outperformer. And for an investor who wants to diversify across asset classes, gold should become a investment to be made, considering safety and the risk of. Also keep in mind that with what has been announced, the US dollar as a currency could see substantial weakening in coming months.
Okay, that's also good news for Indian equities because maybe the FII net selling would ebb with a slow or a weakening dollar. Arunji, my last question. Now, you'd probably want to wear the long distance binoculars that you have and figure out for our viewers the state of play for Indian markets 18 to 24 months or 1 year to 18 months from now. The most important event is out of our way, which is the impending tariffs. Now, we adjust our sales according to the wind that is already known. How do you see Indian markets 1 year from now?
So let me give you a disclaimer or a point of view to this. This is not the final word. There will be lot of tweaking that will continue with this as people adjust to changing times. I believe the next 30 days will see a lot of tweaking in tariffs between what the US has announced, what finally comes into play, let's say from the month of July, which is halfway into the calendar year. Having said that, I believe there would be significant change in stock picking as we go forward. There would be new opportunities which come up considering the new horizon that we have. We will have to look for domestic consumption. We will have to look for companies with export, non-US in focus, and companies which could become manufacturers to the world depending on products which were hitherto not known. So there would be new criteria to evaluate companies, and all of this will take time. So if you were to ask me stock picker perspective, stock pickers delight ahead, a lot of hard work and money to be made, but not with conventional ideas.
Full conversation, Arunji. Thank you so much, especially on the 6 banking stocks that you mentioned, 7 actually, 4 pharma companies, and of course the broader view in the market, especially on gold. Have a nice evening, and as our northern neighbor has often said, may we live in interesting times. I am sure that is something that you are looking forward to when you start to analyze companies which might be outperformers because of this global tariff war. Thank you for joining us.
Thank you. Thank you.
That, ladies and gentlemen, was Mr. Arun Kejriwal talking about potential winners in this space after the tariff war. Let me just highlight what he's mentioned. He sees the domestic demand in the banking and the NBFC sector being beneficial for Indian equities. Therefore, he wants to focus his energies on HDFC Bank, ICICI Bank and Kotak Bank as far as the private banking space is concerned. State Bank of India, Canara Bank, PNB and Bank of Baroda are his picks from the PSU banking basket. From the NBFC space, he prefers housing companies, housing finance companies, which is PNB Housing and Aadhar Housing. The pharma space has attracted his attention via mid-caps such as Blue Jet, Innova CapTab, MediAssist and Indegene. He feels that gold still might relatively outperform equities in 2025. Thank you so much for watching. I hope you enjoyed this conversation as much as I did. There is a lot that's happening on the other side of the break. Stay tuned with Business Today.